Hi there, welcome to the Real FX YouTube channel. This channel is dedicated in bringing to you the most valuable Forex content that you're most likely to pay for somewhere else. And if you are new to this YouTube channel, don't forget to subscribe and hit the bell icon so that you can be notified when we post the next video. And without any waste of your time, let's get straight into the video, and I hope you find this video fruitful. Okay, let's get into the video. On this video, we're gonna be talking about the smart money trap and also the inducement. So I'm gonna bring out this line illustration over here. So as you can see on this line illustration over here, we have an upward trend. How do we know it's an upward trend? Because we're making higher highs and higher lows, so we're breaking structure to the upside. This is our BOS. So today I want to talk about the inducement and also the smart money trap. So the smart money trap is the order block that is going to be left by the market, and then when the market is approaching that order block, people are gonna be compelled, are gonna start buying or selling from that order block, thinking that order block is gonna hold. And then what the market does is it violates the order block and then taps into their extreme order block and then starts buying. For example, here we have this impulse here, and then we had this retracement. So people will be looking forward to be buying from here. People will be looking forward to be buying from here going upward. So they will be putting their buy positions over here, their take profit there, and then stop loss just below that order block. And then what the market does is it violates that and then it taps into this, so it induces the liquidity, because the market knows that people are going to be buying from this point, so it induces liquidity and then it starts buying aggressively from there. So this is not the right order block to trade from. As you know, guys, the market is always going to leave many order blocks, and it's your responsibility to know which one the market is going to respect. So this here is going to be our liquidity. As you can see, it induces the liquidity and then it taps in and then it goes on from there. So this is where we're going to be looking for our buys. Okay, so the same thing happens after that break of structure. What do we expect? We expect to see the market come back, induce some liquidity. Do not trade market that does not have liquidity, guys. Do not trade when the market did not create liquidity. Remember, liquidity is like the fuel of price. So if there's no liquidity, then the market will not move as you expect. So again, here people will be looking to be buying from this part, and then the market taps into it, gives them the impression that okay, now maybe we might start buying, and then it further violates that order block before it pushes to the upside. And the same goes for a downward trend. So in a downward trend, you'll be looking to sell. So our main order block, this is our extreme order block. That there is our extreme order block, and then we also have this order block here. So it induces this order block here, and then after inducing it taps into the main order block. So it generated liquidity. As you can see here, here we can have our liquidity of equal highs. So it takes out those equal highs and then it starts going downward. So others will start looking for sales where when it taps into the order block, they expect for this small change of character, for this minor change of character we have here, and then they expect to start selling from either the Quasimodo level or somewhere here, and then they look to take the price downwards. The same goes for this leg here. Liquidity is gonna be generated here, induced liquidity, and then after the liquidity being induced, and then we shoot to the downward. So now I'm gonna take you to the real life charts. These are some of the trades that I took uh, using this concept. Uh, if you can check here, guys, if the structure is not clear or the setup is not clear, do not trade the setup. Make sure it's very clear that anyone can understand. If anyone can understand it, then it's likely to work out, because as you can see here, break of structure, everyone knows break of structure. And then we had a break of structure. After break of structure, this leg over here happened after the break of structure, and it didn't induce any form of liquidity, so this one cannot be taken as a zone to be taken from. So this is some sort of an outer structure that has to be taken out before we start trading in. So we had an outer structure because it happened after the break of structure, and outer structure, and then we kept on and going on until the market decided to start going back downwards. And then this level here, people will start looking to sell from this level. And then when they start looking to sell from this level over here, the market will come into their order block, taps it a little bit, and then start pushing up. People, they start to get excited, and then it violates that order block. As you can see here, it came to this one, so this is the right order block to take. And then we buy from there, and we expect to push price where, taking out the previous high. The same thing is happening here. If you can check, the same thing was happening here. We had this part, we broke structure. After breaking structure, we started making this moves to the downside, so people will be looking to sell from here, some will be looking to sell from here. So this one and this one, they got violated because they're gonna act as what, as liquidity. And then when they act as liquidity, the market then taps into the main one, and then after that it started selling aggressively, because this here we were in a downtrend. So after in a downtrend, you can see we had a break of structure here. You had a break of structure here, and then after that break of structure, we expected to start selling from where, if you check, this part was supposed to act as our inducement. And then we the last here is where we would have our order block. Just around this area. As you can see, the market did tap into it, and then gave us some small profits, and then took us out. Our probably would have broken even here. So you can't win every time, guys, but it's all about winning most of the time. So as you can see, just by back testing 3 trades that I could have taken here, I've already won the first one there. I did break even on this one. If you check here, after breaking even on that one, this simply means this becomes our church. So if this becomes our church here, this becomes our church, so this becomes our whole leg. So we break structure. So after breaking structure, we have this minor structure going upwards. So this here is gonna be serving as inducement. We induce that liquidity, and then this becomes our zone. So we start buying from there. We start buying from this one. So it's not about winning always, it's all about winning most of the time, guys. That's it for this video.